Let's dive in. It's the weekend, and as the markets settle down, now is the perfect time to take a breath and ask, is NIO quietly becoming the underdog winner of the global EV market? That may sound bold, but if you've been watching the story unfold this week, especially with NIO closing at $5.01, up nearly 3% on heavy volume, there's a compelling narrative brewing. First off, let's frame the stage. NIO stock surged earlier this week, an 8% rally on Thursday followed by a strong close above $5 on Friday. That move came after over 40% gains in July, driven by optimism around new product launches, improving fundamentals, and their unique battery swap infrastructure. Yet, despite all this, institutional investors and many analysts still treat NIO like a long shot. That's exactly why this weekend angle, NIO as underdog, is so interesting. So what's fueling this shift? Let's start with the numbers. June delivery data showed that over 40% of NIO's total deliveries came from the Onvo and Firefly sub-brands, vehicles targeted at more affordable, high-volume consumers. That's significant for two reasons. First, it confirms NIO is moving beyond its luxury niche into scalable market segments. And second, it shows proof of concept for their mass-market strategy. NIO is no longer just a premium brand, it's expanding into volume-driven growth. Meanwhile, the Onvo L90 SUV test drives and pre-sales are starting to show real traction. A successful ramp here could unlock another wave of bullish sentiment. If early demand converts into strong reservation numbers, analysts and institutions may finally take notice and potentially revisit their earnings models. But product growth isn't the only part of the equation. NIO is doubling down on operational discipline. CEO William Li has reiterated a goal to reach adjusted operating profitability by Q4 2025. To make that happen, the company is aggressively cutting SG&A expenses, now targeting less than 10% of revenue, down from 24% just a year ago. On the R&D side, the company is focusing efforts on technologies that offer scalable returns. And here's where things get really interesting. NIO's battery swap network, a feature few competitors match, is starting to show both scale and economic promise. As of late July, approximately 20% of all swap stations are operating at break-even or better. With over 3,100 stations already deployed nationwide, and new research suggesting swap volume is growing steadily, this is transforming from a novel convenience feature into a potential recurring revenue engine. Battery swapping isn't just a consumer benefit, it's a strategic moat. While Tesla and BYD continue focusing on supercharger networks and vertical integration, NIO has leaned into infrastructure in a different way. The net result? A differentiated user experience and a business model that may increasingly reward stickiness and subscription retention. Let's not forget the short interest setup. Roughly 9 to 10% of NIO's float is currently shorted. That's significant, especially for a stock with improving fundamentals and momentum. On a breakout, or even a modest earnings beat, positions could quickly unwind, triggering a wave of short covering. Combine that with investor optimism around Onvo and Firefly, margin progress, and battery swap success, and you have all the ingredients for another potentially explosive move. So where do things stand on the charts? Technically, NIO broke resistance near $4.90 to $5 on strong volume. That level has now converted into support. And while today's trade may show a pullback, a dip that often resets momentum, the weekly close above $5 is significant psychologically and technically. It sets the tone for next week's sessions and suggests that the bulls are firmly in control of the narrative for now. Adding to the macro backdrop, the broader Chinese EV sector is showing renewed strength. Competitors like XPeng and Li Auto have also seen volume gains, suggesting this is more than a company-specific rally, it's sector momentum. With Beijing signaling continued EV support and deregulation of price wars, sentiment is shifting back in favor of players with scalable models like NIO. So, what lies ahead? What are the next catalysts that could confirm NIO as the underdog winner? Number 1. Delivery updates for July and August. If Onvo and Firefly deliveries remain strong, or even accelerate, Wall Street will start to hear footsteps. Analysts like Citi and CLSA may revisit their model assumptions, especially around margins and market share. Number 2. Q2 earnings in early August. This is the next major inflection point. If management delivers stronger than expected margins, guided cost discipline, or upward revenue revisions, NIO could officially shed its speculative label. Number 3. Battery swap metrics. If NIO starts highlighting regional expansion, next-gen station deployments, or improved usage rate, the infrastructure story could go from peripheral discussion to central thesis. Number 4. Institutional interest. Look for any mention of NIO in investor conference commentary, funds increasing exposure, or analyst upgrades. With valuations still low relative to Chinese EV peers, even small upticks in institutional ownership could shift momentum meaningfully. Finally, keep an eye on voter sentiment, from retail forums to options flow. Interest remains high, and sentiment is often a self-fulfilling driver when fundamentals and technicals are aligned. In short, yes, NIO is volatile. Yes, there's still a long road to profitability. But what you're seeing now is more than just momentum, it's narrative shift. The strategy is shifting from niche luxury to mass affordability. Execution is becoming tighter. Infrastructure is becoming credible. And the short interest setup is waiting in the wings. This weekend angle, NIO as the underdog EV contender, is worth watching. Don't underestimate the power of a well-told story backed by results. If you believe in EV adoption, infrastructure-led growth, and operational transformation, then NIO could be the quiet winner people talk about 6 months from now. Let me know in the comments, do you still see NIO as the underdog? Are you confident in the pivot to ONVO and Firefly? Do you believe battery swapping is a real moat? And if you're on board, tell me, are you sticking with your position, doubling down, or waiting for the earnings? Thanks for tuning in, everyone. If you found this perspective helpful, hit like, subscribe, and ring the bell so you never miss another NIO market update. I'll be back soon with more as this story continues to unfold.